people are losing trust in the government and the Federal Reserve Bank. The reason why I own cryptocurrency is because I don't trust the Federal Reserve Bank. They're paying extra money for Gucci skins, Louis Vuitton skin.
What are your favorite investments and why?
I invest my money in 5 places: real estate, stocks, startups, or companies, we'll call them, cryptocurrency, and commodities, things like gold. I love real estate because it gives cash flow and it gives me legal tax breaks. So when I invest in real estate, I'm buying properties for the long term that I believe in. I'm investing in areas where I think that money is flowing into. I'm investing in places where businesses are coming because I want to own a property where I know money is flowing to, where people want to be. That way now I can start creating predictable cash flow. And I like real estate because I don't trust myself. You know, if I spend all the money that I have today, now I know that I'm not going to do that, but if I did, next month I'm going to get another check from my real estate properties. Second, I invest in stocks because I believe in the American economy. I believe that we are the strongest economy in the world, and I believe that we are going to continue to thrive. Obviously, we have issues, but I believe in the American economy. So in the stock market, I have 2 different strategies. I have more of an active strategy and a passive strategy. Every week, I have money that leaves my account that goes into the ETFs that I want to invest in, that give me exposure into the general stock market and into sectors and innovation that I want to be investing in. So that happens when the market is up and when the market's down. Doesn't matter what's going on in the market. That's just always happening. Then I have an active strategy, kind of like with real estate, where I'm looking for companies that I believe in, that I think are undervalued, that I want to own for a long time. So that's my active side in the stock market.
Which one do you think is better for you?
Both. You need both. I mean, I like the economy. I like investing in individual companies. Now, not everybody can invest in individual companies. Not everybody should be doing that if you're not willing to read earning statements, if you're not willing to study cash flow statements, if you're not willing to study a company. You shouldn't be investing in individual companies because then you're more prone to making mistakes. You're more prone to getting emotional because you don't really understand what's going on. But if you're willing to do that, then you know it can pay to invest in individual companies. Then,
so if you don't have the time to invest actively, then you shouldn't do it.
Yeah, if you don't have the time to actively invest into individual companies, stick with ETFs. It's an easy way for you to get exposure to the general market without having to worry about trying to pick the perfect stock.
Doesn't that build wealth slow, though? Doesn't that get your money really slowly?
You're mitigating risk, less potential upside, but you're mitigating your risk.
Yeah, but more risk, more reward.
More risk, more reward, and you have a higher probability of losing your money if you don't know what you're doing. You can mitigate your risk by learning. And if you're not willing to learn, don't take on the higher risk. Then you're just gambling. Mm-hmm. So if you're not willing to take on the higher risk, if you're not willing to learn, then don't take the higher risk. But if you want to invest in individual companies, you will get the best returns if you're willing to learn and put in that time.
Right.
Then I invest in companies. Obviously, Minority Mindset is a company that I own. Then we have startups that I invest in. I'm an investor in a company called Up Counsel. So I am an attorney. I'm also an entrepreneur. Up Counsel is revolutionizing the way that people and businesses can get access to legal work because the whole legal industry is so fat. It is so expensive to get legal work and it's so hard to find legal work, but Up Counsel is trying to change that. It's essentially, you could think of it kind of like a freelancing site almost for lawyers, where now lawyers can come and bid on jobs and you can post your jobs, that whatever it is that you need. So it's easier for you to find an attorney. You have attorneys bidding for your work and you're going to pay less here on Up Counsel than if you went to a big law firm and tried to get a good attorney there. So I like working with companies. I like working with entrepreneurs. So I invest in startups. I invest in companies because innovation is what we need to save America. Innovation is what we need to save this country and the economy. Then I invest in cryptocurrency. So kind of like with stocks, I invest in cryptocurrency through an active and passive method. Mm-hmm. So I have a dollar cost average strategy in cryptocurrency where every day I have some money going into a few different cryptocurrencies that I like. This is happening, whether it's up, whether it's down, doesn't matter. This is happening every single day. And then I have more of an active strategy where if I see a bigger crash, I will go in and buy cryptocurrency. And likewise, I have moved a big chunk of my savings to stable coins in cryptocurrency. So stable coins are supposed to be stable. They stay around $1, right? So you have stable coins that are pegged to the US dollar. They stay at $1. One stable coin is $1. But if you move your stablecoin in a specific account, you will be able to earn interest on your stablecoins. So my stablecoins pay somewhere between 7 and 8.25% interest a year. And that's a lot better than what I get at the bank, where I'm getting 0.01% a year. And I can move my cash out anytime I want. I can sell and move it to another cryptocurrency. I can sell and move it to the stocks. I can sell and move it to real estate. This is the cash that I have waiting to be invested into any other active deal. So that's where I keep a big chunk of my cash.
And that interest rate is great, but I think a lot of people are really concerned that cryptocurrency, I'm investing in it today, but it might not even be around next year.
Why would it not be around?
All these government regulations coming out, there's not a lot of trust behind it.
You cannot regulate away from cryptocurrency.
Yeah, but they're trying to. So you're pouring money into an investment that might not even be around in a year.
China is trying to regulate transactions in cryptocurrency, but you cannot stop cryptocurrency. Cryptocurrency is not controlled by a central agency. If you don't understand how cryptocurrency works, it's not controlled by a central agency like our dollars are. Our dollars are controlled by the government and the Federal Reserve Bank. They can manipulate our dollars by printing more money, and they can control our money supply. In India, a few years ago, they, at the click of a button, said that no longer are a certain note, I think it was like the 1,000 rupee note, is no longer allowed. So people were hoarding these 1,000 rupee notes, and there was like it might have been the 500 or the 2,000 rupee note. Don't remember exactly, but essentially all these people who were hoarding onto tons and tons of cash, because of what the central authority, the government, said. Now all of a sudden, people's money was deemed worthless. You cannot do that with cryptocurrency because it's not controlled by a central authority. It's controlled by the people. They're called nodes. Nodes are computers. So cryptocurrency like Bitcoin is controlled by nodes around the world. You don't have a central authority controlling it. Are you going to see governments try to regulate it? Sure. You're going to see that happen in the United States. But you're also seeing adoption of it. You're seeing countries adopt Bitcoin as their national currency. The United States has its first Bitcoin ETF. Now, I'm not buying the Bitcoin ETF. Personally, I'm buying actual cryptocurrencies, but it's showing you that it is being adopted. And it, at the time of us recording this video, has a market capitalization of around $3 trillion, all of cryptocurrency.
Right.
You cannot just turn it off. We're talking about trillions of dollars of people's money in cryptocurrency, and it's not controlled by a central authority. So you talk about regulation, it can't just not be here because it's not controlled by one person. It's controlled by nodes around the world.
And I completely agree with you. As far as it being the currency of the people, that's great. And a lot of people are investing in it because of that. But governments in a lot of places around the world, they control the people. And if the people can't access the currency, how are they supposed to spend it? So in China, for instance, you talked about them trying to control the actual, transactions of the currency. People can't have access to it. You can't mine it. You can't spend it. You can't hold it. The government's going to find you. What if that happens everywhere?
It can't, and it won't. You have countries around the world that are already adopting it as their reserve currency. El Salvador has already done that. And even if the government creates restrictions on it, that doesn't mean that you cannot access it. There are ways around it. You can use different VPNs, you can get around it, and you will see people leave because of that purpose. Now, China is a communist country.
Right.
It's different than the United States in a free market. If the United States government came out and said that transacting with cryptocurrency is illegal, cryptocurrencies are illegal, now what they're doing is they're infringing on private rights. Because you also have exchanges like Coinbase, which is a private entity in the United States which trades on the public stock market, which means they're now making these companies no longer possible. And they don't have the ability to do that. People are starting to use cryptocurrencies. Banks are starting to use cryptocurrencies. You're already starting to see the adoption. You're going to see probably the Federal Reserve Bank create their own cryptocurrency. We did an interview with Raoul Paul where I sat down with them and talked about similar questions like this. The Federal Reserve Bank will probably create their own cryptocurrency or a pseudo cryptocurrency, but you are not going to see a shutdown.
So if you see a bunch of people, just because a bunch of people have it and they want to spend it, if people aren't willing to take it, then it's pretty much useless, right? So you don't see people people are taking gold. We don't see people going to stores and spending gold because the United States is not backing that like they used to.
Yeah, but gold is a real money. It's a representation of value.
But I can't spend it.
Yes, you can. You can turn your gold into dollars or any other currency that you want anywhere in the world.
I have to exchange it.
Yeah, but people will still accept gold. If you came to me and said, hey, can I buy your shoes? Here's a bar of gold. I will say yes.
Well, maybe not my shoes.
You
But
you can exchange gold for things, right? It's just, what is somebody else willing to accept? And cryptocurrency is being more widely accepted every single day. You're seeing more and more people move to cryptocurrency. In 2017, you saw this massive boom and bust in cryptocurrency. You had a lot of people coming into cryptocurrency who had no idea what they were doing, but they were excited by the idea. Now we're seeing another boom in cryptocurrency. We could see another crash, but you're seeing way more people adopt and use cryptocurrency now than you did before. It is, again, you need some people to accept it as currency, which means you need people to value it. Okay? And every single day you had more and more people valuing cryptocurrency. We have writers here at the Minority Mindset who live overseas, who can't use PayPal, who can't use these other services, who were having troubles receiving wires. So we were paying them with cryptocurrency. Cryptocurrency makes transacting much easier. Cryptocurrency makes technology a whole lot more advanced on the internet. Now, does this mean that cryptocurrency is going to take over the dollar? No, not necessarily. But it will supplement that, because it is a way for now you to move money from one place in the world to another place very easily. And it also is a whole new world of technology. Ask anybody who is a gamer that's 16 years old about buying skins in Fortnite or any game that they play. And they will tell you that there are people that pay money for these digital assets. Well, now this is becoming a real thing that you can do, own digital art, digital assets through technology that is behind cryptocurrency, the blockchain. People are paying extra money to wear Gucci in their video games, not in real life. They're paying extra money for Gucci skins, Louis Vuitton skins. I asked my cousin about this because he's 15 years old in high school. He loves playing video games. And I asked him, is this a real thing that people are paying money for Gucci on their video game? It's a real thing.
Oh, yeah, I've seen it myself. Yeah, absolutely.
And so if people are willing to do that, what makes you think they're not willing to do real money transactions on the internet? It is being adopted and is happening right in front of us. And, you know, it's going to be a slow adoption, naturally, because people are not willing to change always. Change is hard. It's the same thing you saw happen with the internet. People were not happy about the internet coming. The first time that I tried to make a transaction on the internet, my dad was like, don't do that. It's a scam. Never give your credit card information on the internet. Never put in your personal information on the internet. You don't know where this information is going. Now I only spend money on the internet.
I mean, you're right. And I think, you know, over time, ideologies change. People weren't talking to strangers on the internet. And now that's pretty much all we do.
People meet their significant others on the internet.
Right.
Cryptocurrency is going to be the future. Does that mean we're going to see a straight bull market up? No. You're going to see massive crashes. You're going to see ups and downs. But it's not just about owning the cryptocurrency to see it go up. It's about understanding the technology that is behind cryptocurrency. Some things are not going to work. Some things are going to fail in cryptocurrency. You are going to see some currencies fail. You are going to see some businesses fail. That is a natural part of the process. I mean, we could see another 2001 style crash in cryptocurrency. But the whole idea is you are creating a decentralized worldwide currency, which is a movement from the bottom up, from the people up, not from the Federal Reserve Bank down, because people are losing trust in the government and the Federal Reserve Bank. The reason why I own cryptocurrency is because I don't trust the Federal Reserve Bank. They can print money on command. They can dilute the value of your savings, of your dollars on command.
You don't think that'll happen with crypto eventually?
You can't.
Well, I know Bitcoin.
You can't.
I know Bitcoin specifically, you can't. But isn't it Ether? Ether doesn't have a cap of how many.
Different cryptocurrencies have different goals, but it's not the same. It's not controlled by one central agency. Cryptocurrency is not controlled by the United States government. Ethereum is not controlled by the Federal Reserve Bank.
But you just said the Federal Reserve, if they make their own crypto, then it would be.
But that's not the same as Bitcoin and Ethereum.
But what if that becomes the dominant, and then they just control that, and then they do whatever they want with it?
We're going to jump back into the video in just a second, but before we do, I want to give you a quick word from our sponsor, BlockFi. If you're interested in cryptocurrency, then you need to check out BlockFi, because with BlockFi, you can finally start earning interest on your cryptocurrency. So if you own Bitcoin or Ethereum or one of the stable coins, you can earn interest just for holding on to your cryptocurrency. So now you don't have to wait to sell your coin to make some money. You can just hold it and earn some interest through BlockFi. BlockFi is not a bank. It's a crypto financial institution that will pay you when you keep your cryptocurrency at BlockFi. The way it works is you deposit your cryptocurrency into BlockFi, and then BlockFi uses your cryptocurrency as collateral to lend out money in cryptocurrency to big institutions, and then these institutions pay BlockFi interest, and then they pay you for keeping your cryptocurrency at BlockFi. And the best part is you can pull out your cryptocurrency whenever you want. You are not bound to keep your cryptocurrency there for any period of time. You can deposit your cryptocurrency and pull it out at any time you want. Plus, they just launched a new ACH feature which allows you to passively buy cryptocurrency. So you can set up a schedule where you're buying $10 worth of Bitcoin or Ethereum every single day or every single week, and as soon as you buy this cryptocurrency, it's going to start earning you interest. Now, this is not completely risk-free because BlockFi is not FDIC insured because they're not a bank, but if you do want to learn more and you want to see how you can earn interest on the cryptocurrencies that you do own, I'll put the link to where you can learn more and get started with BlockFi in the description below. Minority Mindset is a paid partner with BlockFi, so if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and see how you can earn interest on your cryptocurrency, I'll put the link to where you can do that in the description below. And now let's go back to the video. Cryptocurrencies are run by people. You know, I talked about this in an interview that I did recently on another Bitcoin channel, where the concern is you're seeing a lot of billionaires with a B go into Bitcoin. Billionaires buy Bitcoin. The BBB.
Sure.
And so the question is now, what do people do? Do people run away from Bitcoin because now billionaires are trying to buy Bitcoin, or is this good for Bitcoin? And this is the question now people can answer themselves. If they feel like cryptocurrencies or a cryptocurrency is being manipulated by an external force, people have the ability to leave and move to a different currency. So it is controlled by the people. It is not controlled by a central authority. And that's what makes cryptocurrency different than fiat money, government-controlled money, because government-controlled money is run by the government and the Federal Reserve Bank. You have a central authority. I mean, it's mainly controlled by the Federal Reserve Bank, but it's mainly controlled by one central authority. And that, you know, going back to your original question of where I invest my money, I also have commodities. I own physical gold. Why? Because it's real money. I don't look at this as an investment. It is just real money, because it takes time, effort, and labor to mine an ounce of gold. It costs 12 cents to print a $100 bill, and the government, the Federal Reserve Bank, can print these dollars on command. Money is supposed to be a representation of value. That's what it was supposed to be. Our dollars are a representation of value only because the government says that these dollars have value.
Right.
Gold, on the other hand, has value because it takes time, effort, and labor to mine gold. Gold has been money for centuries. Since before modern economies, gold has been a commodity, is a real money, but people can exchange it for something else.
Right.
And so I own gold for that very purpose. I don't care if the price of gold goes up or down. I'm not looking at that. I just understand that it's real money. It's just sitting there for worst case scenario. The reason why I own gold is because I don't trust the government fully. Look, I'm a big believer in the USA. I'm a big believer in the U.S. economy. But in case things go wrong, I own gold because that's real money.
So if it's such, real money, why would the U.S. government want to just use paper money instead of using actual gold? Like you said, if it has such powerful value, why did we switch?
Because it's easier for the Federal Reserve Bank and the government to print money when you have dollars that are paper instead of dollars that are backed by gold. And it allows the government to create more inflation. It allows them to create a boom in the short-term economy, because if the government has to mine more gold in order to create more money, that means now it's going to take more time, effort, and labor to create money, which is good in the economic sense, but it's bad in the sense that it takes a lot of time and it can be harder to do that. But if they don't have to do that and they can just print more money and people still believe that these dollars have value, if people keep accepting these paper dollars as real money, then why do you need to put in the effort and labor to mine this gold? So you can just print it. That's what the government does. In 1971, August 15th, President Richard Nixon took the dollar off of the gold standard temporarily because you had a lot of countries that were getting worried about the United States and they were calling in gold. So they were taking their US dollars that they were holding on to, telling the government, here, take your dollars back, give us the gold. So the United States government had a lot of gold leaving the country. And so that's when President Richard Nixon temporarily took the dollar off of the gold standard. And he said that we're no longer convert dollars for gold. You have to hold on to our dollars. So what this does now is the government was then able to print as much money as they wanted through the Federal Reserve Bank. They can print money and inject it into our economy, which ultimately creates more inflation because now you have more dollars coming into the economy. More dollars means that each dollar that you have is worth a little bit less, which means that now the price of things go up, which means that now the majority of people are ultimately poorer than they were before because you need more dollars to buy the same amount of things as before.
So the federal government is intentionally creating inflation.
They need to. That's the only way they can pay down their national debt because inflation means that the value of your dollar is going down. The value of your dollar is going down. That means that the United States government can now pay back their $29 trillion of national debt with cheaper dollars.
Yeah, but think of all the people that hurts in the meantime. Sure, the federal government gets to pay off its debts, but the regular people, they're drowning in debt. Now they can't pay back their debt because the money they have is not worth anything.
Well, that assumes that the federal government is looking out for the people's best interest. Who is the government looking out for? Who is the Federal Reserve Bank looking out for? Depends. It depends. When the Federal Reserve Bank is bailing out the stock market, when they're printing $120 billion a month and injecting it into the stock market, which they are still doing at the time of me recording this video, who are they benefiting? They're benefiting the institutions and the banks who they're buying these assets from. They're benefiting investors in the market because they keep propping up the market. They say that it's helping the economy because when the stock market goes up, people feel wealthier, they're more likely to spend, which means it grows the economy. But it also hurts the average person because as more and more money is printed, the value of your dollars go down, which means that now for the average person, your earnings that you're working hard to earn, your salary doesn't stretch as far. Your savings that you've been working hard to save don't stretch as far. So there's two sides to every coin. And that's where you have to understand. It can benefit one person and hurt another person. When the government talks about creating inflation, what they say is, yes, obviously they want to pay down their national debt. And if they have more inflation, then companies will have more dollars. That way they can reinvest in growth, hire more people. That's what they're trying to do. It's a game of chicken where they're hoping that, yeah, we're going to raise our national debt, but we're hoping that by raising the national debt, we can grow the economy faster. But if you can't grow the economy fast enough, we're going to ramp up national debt even more to grow the economy faster. So it's like this game of chicken. But what's happening is our national debt is growing like this, but our economy is growing much slower. So we're seeing a widening gap between the national debt and our economy. And that is the issue. So I don't like the idea of relying on the government or the Federal Reserve Bank to control our economy, to control how fast our economy is growing. I like the idea of entrepreneurs innovating, creating, building value. That way we can grow our economy. So, when we talk about investing your money, that's why I want to take my dollars and move them to real estate, stocks, businesses, cryptocurrency, and commodities like gold, because I understand that these things have real value. Now, you got to also be careful that if you just immediately liquidate out of all of your cash and a crash happens, well, then now you're not going to have cash to capitalize on a crash because you can buy assets for pennies on the dollar when you see a crash happen. And so this is where you got to be kind of a little bit financially educated and understand how the different things play a factor with one another, because when you see a crash happen, that's when asset prices tank, and then you can come in and buy more if you have access to cash. Now, there's a lot of ways to get access to cash. If you have other commodities, you can liquidate them. You can take out debt smartly to buy assets. But there's a lot of different ways that you can access cash. But if you have access to cash, when that sort of crash happens, that's when you can come in and buy more aggressively. So I like real estate because I get the cash flow. I can create a predictable stream of income because I'm a real estate. I like the stock market because I believe in the American economy. Yes, we have concerns, but I believe in the American economy. I invest in companies because I love entrepreneurship and I love innovation. I love working with entrepreneurs. I love trying to see these companies grow. I love helping them grow because entrepreneurs are in the business of solving problems. Mm-hmm. I like helping with that. I invest in cryptocurrency because I don't trust the Federal Reserve Bank. I invest in cryptocurrency because I believe in the technology. I invest in cryptocurrency because I understand the value that there is, and I keep a lot of my cash in stable coins because I understand that I can get a better interest rate on my cash while I'm waiting to invest it here than I would if I kept my cash in the bank. And then I invest in commodities like gold because that's real money. Mm-hmm. It's a representation of value. It is real money. I don't care if the price of gold goes up and down. I don't look at it like an investment. I look at it like money.
Right. And I'm a little confused, though, because you said you don't trust the Federal Reserve, but you believe in the American economy. I'm kind of confused.
I don't trust the Federal Reserve Bank.
You said the Federal Reserve helps the economy by boosting it.
They try to. Look, the American economy is the strongest economy in the world. Mm-hmm. We are a free market. The reason why you have so many people around the world willing to risk their lives to come to this country is because they have the ability to become successful in America. You have people, if you're born and raised in America and you've never seen anything outside of this country, it's very hard to understand. But you have people around the world that are literally willing to risk their lives to come to this country. Why do you have grown adults risking their lives, trying to leave their family, trying to leave their native homes to come to the United States? Because it's the land of opportunity.
Right.
That's why. And so America has a unique advantage where if you work hard, if you learn, you have the opportunity to succeed. Now, it can be harder because sometimes the system can lead you in the wrong direction. Sometimes you're told that, hey, you need to rack up $250,000 in student loans if you want to become successful. You need to do X, Y, and Z. Yes, there are places where the system lies to you and you can be screwed over if you don't understand money. But if you're willing to work hard, if you're willing to learn, you have the opportunity to become successful. You don't have that in other countries, even in other first world countries. You don't have that same opportunity. If you talk about in a third world country, you don't have anything remotely similar to that. In other countries, if you have a certain name, certain last name, people will not even allow you to do business with them because of what your name is, because of who your parents were. You don't have that same thing in the United States. Do you have racism? Yes. Is it harder for some people than others? Yes. I have encountered that myself. I have seen my fair share of racism. You can just look at the comments. I've seen my fair share of racist comments. But the opportunity in this country, in this economy, is better than anywhere else. Because you can understand that if you can create value, if you can solve a problem, you have the opportunity and the ability to succeed. Is it easy? No. Is it harder for some people than others? Yes. So our economy is the best in the world. The Federal Reserve Bank is hurting our dollar through the money printing, through the manipulation. But I believe in our economy, which is why I invest in stocks.
And there's a lot of people that come over here believing all of that same, land of opportunity. There's a lot of things that they can do. But the fact is, you said it yourself, there's a lot of institutions, banks, and the student loan companies that we have out here that take advantage of people. So now you have millions of people coming to the United States, thinking it's the land of opportunity, thinking they have to get a college degree, thinking they have to take on debt, and now you have more people getting into more debt. And who does that benefit? Banks and the financial institutions.
Well, you're right. You don't have to worry about a bomb dropping over your head, which is another advantage. Now, this is where financial education comes in handy. This is what Minority Mindset is trying to promote. It's so you don't get screwed over.
Right.
And for somebody who is really trying to find their way to success, they will learn. You are going to see some people get screwed over that are handing over their paychecks to banks. They get caught up in the idea of, I want to get rich, I want to look rich, I want to have these nice things. So they rack up credit card debt. That is going to happen. I mean, whether you like it or love it, that happens. It's not something that we're trying to see happen. We're trying to make sure that people get financially educated so they can take care of themselves. Mm-hmm. But this is the place where you have the opportunity and the freedom to do what you want. Hey, if you want to live in credit card debt, and you want to drown in debt and you want to look as rich as possible, it's a free country. You can do that. It's a free country. I do not promote that. I do not advocate that. I do not want you to do that. It hurts me when I see people do that. But it's a free country. And so you have the ability now to choose how you want to live. You don't have to live the way you grew up. You don't have to live the way your parents did. You don't have to grow up the same way your grandparents did. You can have a completely different life. It is in your hands if you are willing to put in that work and if you're willing to learn. It takes a lot of work. And it takes a lot of education. And if you're willing to do it, that opportunity is here in the United States. If you want it, you have that opportunity.
So you think America is the place for that, not any other country in the world? We are the best.
100%.
You don't think any other free nation or any other country that has similar kind of financial systems like we do?
If you think a country has a better financial system, then why don't you go there? America has the best land, the best opportunities in the world. Why do you think every major corporation in the world, every major business in the world, every major entrepreneur in the world wants to live in the United States?
Money.
The most opportunities here. There's a reason why. People want to live here. Now, are people leaving because of things that are not right? Yeah. I mean, you're seeing people leave the country who have become cryptocurrency millionaires because they don't like the way that the United States is taxing and regulating cryptocurrencies. We have to get competitive as a country. We have to stay competitive as a country. Not everything in this country is perfect. That's not what I'm trying to say. We have our own faults. But compared to other places in the world, we are the best, hands down. Now, we need to make sure that we stay competitive. But that is where, there's a reason why people want to be here. If you don't want to be here, you're free to leave.
Yeah, we've had that kind of title for a long time now, is like the land of opportunity.
Yeah, and the unfortunate thing is every company, every empire, every country has a lifespan. And we've been at the top for a long time. And you can kind of look at this lifespan with the debt cycle. Ray Dalio calls it the long-term debt cycle, where you look at a course of great empires. After 50 to 100 years, every dollar, every currency goes through this sort of debt cycle where you build this massive bubble, it becomes very big, and then it ultimately bursts, and then it comes back down, and it causes kind of like almost like in a market crash where you see, redistribution of wealth, because then people who made a lot of money in the markets, they lose money, new people come in, they buy, builds new wealth for these people. You see the same thing happen in economies and countries through this long-term debt cycle. And so, the United States has been on top for a long time. And obviously that's concerning, because if we want to stay at the top, there are certain things we have to do, but they're painful. And right now we're not doing those things, like controlling
does
our
that
spending.
scare you that we're not doing them?
Absolutely. That's why I invest my money in the things that I talked about. I invest in real estate, I invest in stocks, I invest in companies, I invest in cryptocurrency, and I invest in commodities like gold. I can't predict what's going to happen tomorrow. I have no idea what's going to happen. I don't try to predict that. I move my money in a way where I can take care of myself, my family, and my community, because I want to make sure that I'm financially educated and that I can do that. I don't know what's going to happen tomorrow. I don't know if we're going to see a crash. I don't know if we're going to see a boom. I don't try to predict that. If I see a crash, I will buy more. But I'm just trying to understand what is going on in the economy, in the world, that way I can make the smartest decisions with my money today.
So we actually have a few questions from some of our viewers on our YouTube channel that I want to ask you.
Sure.
So today we are getting a question from Just Ducky on our YouTube channel, and the question is all about, ironically, we talked about this already a little bit, about foreign exchange. So they want to know about trading and invest. The question is, a lot of today's era is about real estate and trading, investing in stocks. But what about foreign exchange? What about Forex trading? They want to know a little bit of your thoughts on this and what the kind of differences are.
I'm not a trader. I don't trade my money. I don't trade in stocks. I don't trade real estate. I'm not a flipper. I don't do Forex. I invest in real estate, stocks, companies, cryptocurrency, and commodities like gold. I don't do Forex.
What is Forex?
Forex is the foreign exchange market. You're trading dollars for pounds, dollars for euros. You're trying to just capitalize on little ups and downs. That way you can make some money quickly. I don't do that. I did try it when I was in college. I was trying to figure out how to make money You can make a lot of money doing it. You have some people making a lot of money doing it, but it's not for me. I am not a trader. If you want to be a trader, you have to learn how to do it. It's highly risky. You can make a lot of money, but the majority of traders will lose money. It's not for me. I like investing.
Yeah, absolutely. Fair enough. Another question that we have today is from Sherwin D'Souza, and the question is very personal. What do your parents think about what you've achieved so far?
Oh, they love it now. They hated the idea of me being an entrepreneur before. They hated the idea of me not becoming a doctor before. But now it all changed once I started to see my success. I was working on a different business before Minority Mindset, and I didn't really tell my parents what I was doing. And then I was featured on the news, and my parents' friends called my parents, and they were like, "Oh, I just saw your son on the news." And they're like, "Oh God, what did he do?" They're like, "No, he has this business and he's really successful and he's making a lot of sales." And they were like, "What?" It was a different business that I was running, a sock business. So they come up to me and they were like, "What's going on with this?" So that's when I started telling them, they knew that I liked entrepreneurship, but they didn't know that I was actually like fully vested in it. And when they started to see that, that's when all of a sudden things flipped, because before that they hated the idea.
I was just about to ask, what did they think about it before?
They hated the idea before because, it's like they came to this country with very little. My parents came to this country with less than $100 and they busted their butt. They didn't take days off. They worked very, very, very hard because that's all they knew. And so when you come from that type of background, you want your kids to become successful. And the way that we're all taught is study hard in school and get a good job. And so that's what I was told to do. Study hard, go and become a doctor, like most brown people, right? That's what you're told to do. And so when I told my parents that I didn't want to be a doctor, they were not happy. And then when they found out that I was going to be an entrepreneur, they had no idea what that was. They didn't understand it. They hated the whole idea of it. So I did it all in secret. And then as soon as I started to see my success, that's when things started to change. And now they love it. They absolutely love it now. It's crazy how things come full circle. We joke around about this all the time. But, I love my parents more than anything. They're the hardest working people that I know. And they just didn't have that financial education. And so they thought they were doing the right thing, but they didn't know what the right thing was for me.
Right. Yeah. And now you got that hustle mindset.
The hustle mindset. The hustle never stops.
Yeah, absolutely. So you talked before about real estate. And you talked before about all of the advantages that it has. And one of your big draws is that you can find an area that you like, that you think is growing, that you think is building. But what if I'm looking to invest in real estate and I don't live in an area that people want to live in? What do I do?
Well, why are you living there?
Well, I live there because it's cheap. Maybe it's because my family lives there.
Okay. Well, you don't have to invest directly where you live. You don't have to invest within 10 minutes of where you live. You can invest a little bit further. I get a similar question from people who live in New York and California, where you can't find anything in my neighborhood less than $1 million. How am I supposed to invest in real estate? And in my opinion, there's a lot of opportunity in real estate, and that requires research, and that requires you looking around. So you can look in areas where money is moving to without being in your neighborhood. Like if you look in the Midwest, not just Michigan, you can look in Michigan, Indiana, Illinois. There's a lot of states in the Midwest where you are seeing pockets and areas of population growth. And that's very easy to find. Just go onto Google and you can look at different states, look for population growth. And the advantage of places like the Midwest is property values are way less than you would see in the East or the West Coast.
Okay.
You're not going to see the same appreciation potential that you would see in some of the hotter areas, because you're seeing massive amounts of people just moving into these areas. But in the Midwest, you see steady cash flow. And so you can invest in a property. This is very common. You can buy a property for under $150,000 and rent it out for $1,500 a month. And so how do you find that now? First, you got to look at where you want to buy. You got to look at the type of property you want. Maybe you want to buy a single family home. That is the easiest way to start, because you need the least amount of capital, least amount of cash. You could look at apartment complexes. I love multifamily buildings. So you got to know what you want. You got to know where to buy. You can look at places like LoopNet if you want to find commercial buildings, if you want to find individual properties. Once you find the area that you want to invest in, look for a realtor that is working with real estate investors in that area. You want to find a realtor that's specifically working with real estate investors, because if the realtor is only working with people who want to buy their first home or to buy their next home, they're not going to understand what is a good investment property and what's not. They're going to find you something that's way too expensive, that's not going to get you the best return. So you want to find somebody who works specifically on the real estate investing side.
Gotcha.
Then you want to start looking. You're going to have to go through properties. You're going to have to make some trips out there. It's more work, but now you can find the type of deals that you want. When I look for real estate, I'm looking for a 7% cash on cash return on my money, meaning for every $100,000 that I put in, I'm going to make $7,000 of positive cash flow after all expenses a year. So that's how you start finding the properties. If it's not where you are, you're going to have to look outside of your neighborhood. If you cannot afford the properties in your area, you're going to have to look outside. There are different types of opportunities in so many different places. And you can find deals under $100,000, which will produce steady cash flow, which have the potential for upside, but it's going to take more work. Now, the question is, how do you find where businesses are going? And it's really not that hard, because in real estate, there's no insider information like the stock market. In the stock market, if you get insider information, if someone tells you that there's going to be a merger happening, it's illegal for you to make a trade or an investment based off of that. But in real estate, if you find out that Walmart is opening up a store in a city and you make an investment based off of that, it's not illegal. It's actually completely legal. So what you can do is you can talk to different cities, go to the city hall, ask them, are there new businesses coming? What are some of the new developments coming in your area? What do you see happening in the next 3 years in your neighborhood or in your city? And these are the type of questions you can ask. This is how I found a lot of my investment properties, because I saw that there were cities with whole new businesses coming in. Oh, do you see this vacant land over here? Yeah, Walmart is going to develop that land and build up a Walmart. And if Walmart comes, they're also going to put in a whole new retail shopping plaza right in front of it. Oh, so you're talking about tens of millions of dollars coming in right here? Yes. Oh, so now you can go and look for properties in the area that you want to buy. Just like that, there's another city which I'm investing in now, which has unveiled that they want to make this massive tens of millions of dollar investment into developing a brand new downtown. There's some vacant buildings on this major street. They want to tear all these down and build a brand new downtown, make a walking downtown so people can walk there. And it's nothing like that right now. Now, this is not going to be fully visible for the next decade. But this creates opportunity for me to come in now and find properties that are cheaper, that need work. I can come in and renovate these properties, make it a better place to live, and capitalize on that upside, because I'm doing the research beforehand. I'm putting in that work. And it's hard in the beginning because you've never done this before. If you've never invested in real estate before, this is all going to seem like a foreign language. How do I do that? But you just got to do it. You just got to start. You got to start talking to cities. You start talking to real estate agents. You start talking to people in the city itself, and you will start to learn, because people like to be involved in their community. And when people are involved in their community and you start to get to know them, they will tell you what's going on and what's coming, because people like to be involved in their community. Right. So you have to start getting involved, and you have to start understanding what's going on. That way you can find the opportunities in your area.
And I want to ask too, kind of, you mentioned actually going out and seeing properties. What do you think about this kind of movement of crowdfunding and REITs kind of investing online in places that people haven't ever seen?
It's awesome. I mean, I think it's great. I invest some of my own money in Fundrise. It is a sponsored Minority Mindset. I'll put a link for them in the description. But crowdfunded real estate is awesome. And it's a way for you to now access real estate investments for very little capital. Now you can get exposure to real estate investing. You don't got to deal with tenants. You don't got to deal with trying to find the property. You don't got to deal with managing the property, doing the day-to-day work, finding the property management company. You put your money into a fund, which gives you exposure to real estate. Now, I prefer owning physical real estate. I like owning physical real estate because I like being the entrepreneur behind it. I like revitalizing properties. I like getting the tax breaks that you get from real estate. So I rather own physical properties, but I do have some money in that type of crowdfunded real estate. I think that's a great entry point for beginner investors who don't want to deal with the headache with real estate investing. And even if you're not necessarily a beginner, if you don't want to deal with the headache of real estate investing, it gives you exposure to real estate without all the headache of real estate.
Yeah, and I think at the touch of your fingertips nowadays, pretty much anybody can do it.
The internet has made investing much more accessible, but you need the right financial education, because just because something's accessible doesn't mean it's easy. You have to take the action and you have to take the education first, and you have to be willing to do that. And if you're not, then you're going to lose your money. I mean, you have to understand that even with things like Fundrise, there's a chance that you can lose money. If you see a real estate crash, you can see the value of your assets go down. It's not liquid like the stock market. In the stock market, you can sell your investment in a second. With Fundrise, you can't. You have to own that fund for a number of years because now you're trying to get exposure to real estate. So it's the same concept. You can get paid with cash flow. You get your share of dividends and appreciation. You can get paid with these quarterly payments that you get, but you have to understand that you can't just sell it like you can the stock market. And so, if you see massive swings in the real estate market, you're also taking that risk, but you also get the upside if real estate prices go up and if rent goes up. So everything has risks. Like we talked about earlier, there's risks with everything. There's also risks with not doing anything, but you have to understand how to mitigate that risk.
Now, I want to ask you about startups because you were talking a lot about risk before, about, making some investments in the stock market. Some are risky, some aren't risky. A lot of people would think startups are super risky. Yeah. So as far as investing in those, what can you kind of tell people? What's kind of your experience with that?
It is very risky. Most startups will fail. And the advantage is you don't have to hit every successful startup to make money. Some startups will go very big, some will do nothing, and some will completely fail. So again, it is very risky.
Right.
Now, it has become much more accessible, just like everything else in the last few years, because of something called Regulation CF, Reg CF, which stands for Regulation Crowdfunding. So you can go to crowdfunding sites like Start Engine, WeFunder, Republic, which allow you to now invest in startups. So you can see startups, these are typically valued somewhere between $1 million and $50 million, the valuation of a company. And you can come in and invest your own capital, typically with as little as, I think, $100. You have to check the site. I think everyone's different. But around $100, you can go in and make your minimum investment into companies. Now, what you're doing is you are getting ownership in these companies. And the risk is now the company can go bankrupt. It can fail. It doesn't do anything. Very possible with a startup. High risk, high potential reward.
How do you mitigate that? Is there a way to mitigate investing in a startup?
Yeah, I mean, you have to do your research. You have to learn who is the founder, learn about them, look at their LinkedIn, see what they've done, watch their videos, see their interviews, see what type of person they are. How passionate are they about your product? Because if they're just one of those like high-paid CEOs that isn't really passionate about the product, well, that might not be a good thing. But if they're super passionate about changing the world and solving a problem, now that's a good sign. You can look at what the industry is. Is this an innovative industry, right? We're seeing a lot of innovation in fintech. We're seeing innovation in the genome technology. We're seeing innovation in a lot of fields. If it has that sort of innovation, then that's another opportunity for you. But you have to make sure that it's a good product. Is the product something that you would own? The cool thing is sometimes you'll see products that you're buying all the time, food or subscription services that you're paying for already, then now you can just be an owner in the company. And if you're using it and you love the product, then chances are other people do too. So that can be an opportunity for you to come in and buy. Now for me, I have a little bit of an advantage where, I am an entrepreneur. I can invest more capital and I can also provide exposure to the company or provide advisory services to the company. So I like to work closer with the companies that I invest in because now not only am I an investor, but I want to be a part of the company. That way I can help the company grow.
Right.
Because ultimately, if I can help the company grow, we can solve more problems, we can help more people, which will also help my investment. So I have a little bit of advantage there where I can help the companies that I'm invested in. But you now have the opportunity to invest in a whole bunch of companies. And these are companies before they go huge. Some of them will go big. Most of them won't. Most of them will fail. So, you can't just completely mitigate out the risks. You're going to lose money on some of your investments, if not most of your investments. And you have to understand that because that's just the nature of startup investing. It's not just with regular people. It's the same thing with private equity and venture capital and angel investing. These are all different layers of investing in individual companies. All of them come with their own share of risk. And they understand that. They know that a big chunk of the companies that they invest in are going to fail. And so if you want to invest in startups, you have to understand that. If you're not okay with that sort of risk, then don't invest in startups. You don't need to.
Right. But the best businesses are run by the best entrepreneurs.
Yeah, and they also have to know how to manage their money. I
Right.
mean, it's a two-part But yeah, entrepreneurs, if they are very passionate about the product and they want to change the world, they will usually find a way, but you have to know how to manage the cash flow, which is another part of it.
I love it. I love that.
All right, man. Well, another guac talk in the books.
Another one down.
Good question, man. You really try to push me today. I like
I'm
that.
just curious.
It was fun. If you want to watch more of Nathan, check him out at Minority Mindset News. Daily updates on the top finance and business world. Every single day, new videos. Subscribe to the Minority Mindset. Man, we'll see you next week on Guac Talk, right?
All right, sounds good.
All right, let's do it. Thank you for watching. If you enjoyed this video, here's a video on things you need to know if you want to become wealthy that I think of love. And while you're at it, download our free guide on investing your money in the stock market. And as always, keep hustling. You have Robert Kiyosaki, who is essentially like finance everything, never pay for cash for anything, and then use your money to buy investments and have your investments pay for all of your stuff.